in December, the 27th straight month of producer deflation, but the softest reading since August amid continued efforts from Beijing to stimulate demand at the end of the year. Let's get more on this now with Nadia Al-Bilasi in Dubai. She's a senior market analyst at Equiti Group. Hi there, Nadia. Now, China has been battling with persistently weak domestic demand for some time now. Even with the stimulus measures, why is that at the moment?
Good morning, Taiba. Yes, it seems like the stimulus measures are going to take more time to instill in the economy or to show that indeed that demand is increasing. I think the absence of inflation is going to continue to weaken demand for the rest of 2025. I think we have a very soft outlook for China's demand in 2025 for the precedent future. This will be because of the household spending that is very weak right now. We have what we call a de-inflationary trap, which is caused by weakness in demand, weak household spending, and to combat that, China's government has increased wages, which amounts to 10 million to 20 million in the economy, increased wages, and still the economy is suffering from low and poor spending. So I think this problem is a very, it will widen this array of a problem, especially amid a healthcare problem situation right now in China, and a weak monetary policy as well that can't combat, or they cannot hike rates. They have a very accommodative monetary policy. They can't do anything because they have the absence of inflation.
And factory prices have also been plummeting for more than 2 years now. What risk does this pose to China's manufacturing-heavy economy?
This definitely poses a huge risk. I think China's economic indicators have been weakening. We did see a rebound here and there in some of the few economic indicators recently, which means that some things have been recovering, which is good. I think that means that the stimulus measures that have been rolled out in December, they may have been pushing the indicators up slightly. However, still the impacts that we need to see of the stimulus measures are yet to be seen so far in the first quarter. So I think that the more stimulus measures that they do definitely is going to take it's going to show up in the economy. I think that's just going to lag a bit, but a very accommodative monetary policy. This is why we're going to see a bit of economic indicator, especially amidst the higher tariffs and all these issues that we are seeing in the markets right now, in global markets, that are going to weigh. Also, I think they're going to let the Chinese yuan be weak because of these economic indicators. They want to leverage a weaker Chinese yuan, and I think this is what we're going to see for 2025.
Okay, Nadia Al-Bilasi, we will have to leave it there. Thank you very much for your analysis.
Thank you, Taiba.